What's up, everybody? Welcome to another episode of China Update, where I try and help you guys keep on top of the world's #2 economy. My name is Tony. Let's jump in. Now, first up, we're going to talk about the phone call between US President Joe Biden and General Secretary Xi Jinping over the weekend, last weekend that is. This is the first time the two leaders have spoken to each other in about 7 months. Now, the readouts that we have from both sides that were published in US and Chinese media are fairly boilerplate in the language. But in a sign, though, of how the conversation went, within 24 hours, there were stories in US media that the US is considering a request from Taiwan to rename the Taipei Economic and Cultural Representative Office, a sort of de facto embassy in Washington, to the Taiwan Representative Office. Now, those of you who watched this will remember that back in July, Lithuania, the country of Lithuania in Europe, called their office the Taiwanese Representative Office, a move which greatly angered China, which would later recall its ambassador to Lithuania and require the Lithuanians to recall their ambassador from Beijing. State media in China, in response to these US media reports, expressed that the same thing could be in store for the United States. Quote, if the US renames the island's representative office in Washington, recalling the Chinese ambassador to the US would be the most basic response, said the expert. There would be more retaliations in the Taiwan Straits as the People's Liberation Army, PLA, will take more direct actions to deter Taiwan separatism. End quote. The Financial Times also reported that, quote, senior US and Taiwanese officials were due to hold a round of sensitive talks known as the Special Channel in Maryland on Friday, end quote. The Taiwanese delegation includes National Security Advisor in Taiwan and the Foreign Minister, who, quote, cannot visit Washington because of US restrictions on top Taiwanese officials visiting the capital, end quote. The Wall Street Journal also reported soon after the Xi-Biden phone call that the US is, quote, considering launching an investigation into Chinese subsidies under Section 103 of the US trade law, which could lead to new tariffs, end quote. The article also claimed that the United States Trade Representative doesn't plan a wholesale reduction in tariffs on more than half of the Chinese tariffs that were imposed by the US during the Trump administration. And, quote, instead, the USTR, US Trade Representative, has been conducting exercises to see which tariffs are hurting the US economy or could substantially raise the costs of other parts of the Biden agenda. So it looks like the Trade Representative is in no particular rush to reduce or remove many of the tariffs erected during the Trump era. The Chinese side also sent signals after the Xi-Biden phone call that not everything was going particularly well. Soon after speaking with Biden, Beijing expressed that Xi had had a much happier and warmer conversation with Germany's Angela Merkel. Quote, analysts said that the tone of the two phone conversations was different, as China and the US are drawing bottom lines for each other, while China and Germany are seeking common ground for cooperation. End quote. So it doesn't appear that the conversation between the leaders is going to lead to any major improvement in relations anytime soon. Now, while we're on the subject of China-US relations, there are a few other developments we should touch on before we move on to other stories. And what is likely going to be a much bigger story in the United States, a domestic story in the United States, than a story that affects the China-US relationship, especially on the China side that much. It is being alleged this week that during the final months of the Trump administration, the US, then Defense Secretary Mark Esper worried the Chinese were misreading the situation in the United States and that their misconception could lead to a conflict that neither side wanted. It is alleged that Esper directed his policy office to issue a back-channel message to the Chinese to reassure them that the US had no intention of seeking a military confrontation. Like I said, this is more a domestic story in the US than an international story that affects the US-China relationship at this point, but I thought it was worth mentioning as it was trending in US domestic media this week. The Asia Society published a new report this week entitled China's New Direction, Challenges and Opportunities for US Policy. Quote, The defining challenge facing the US, its allies and its partners is understanding how China under Xi Jinping is evolving in the face of changing domestic needs and external pressures. A major policy risk is that the US will misread and misinterpret what is happening in China and will either overestimate or underestimate the threat China now poses. And quote, the report is being read in policy-making circles in Washington and other centers. And one more thing, US President Biden will gather the leaders of the so-called Quad at the White House for an in-person meeting next week. The Quad is an informal partnership between the United States, Japan, India, and Australia. Only a week or so after officials were likely breathing a sigh of relief that the Nanjing based Delta outbreak had been suppressed or brought under control, on Monday, Fujian, a city of 3 million residents in East China's Fujian province, was dealing with a new flare-up, a new breakout that saw more than 90 infections across 3 cities over the weekend. By Tuesday, the infections had spread to the major city of Xiamen, also known as Amoy in the west. The city of 4 million went into lockdown mode and residents were told not to leave the city unless absolutely necessary. 50 new cases appeared on Wednesday, one being found in the southern province of Yunnan. And keep in mind, of course, these numbers are all official numbers. Take that with a grain of salt. By Thursday, the number of new cases jumped again to almost 70. As of the filming of this, new cases are being discovered in southern provinces. Hey guys, if you're enjoying the content, don't forget to hit that like button. It's a huge help for a small YouTuber like myself, especially because YouTube considers this content too sensitive and it doesn't recommend it as much as regular videos. So it's a huge help if you hit that like button. And if you are getting some value from this this sort of material, if you do think that I'm adding value in some way, I release one of these videos every week. So maybe consider subscribing and you'll be notified when I release this, typically on a Saturday or a Sunday. Cheers. And also a massive thank you to my Patreon supporters. As always, you guys rock. Thank you so much for supporting a small channel like this. I really appreciate it. Cheers. Chinese media is reporting this week that regulators will require Alibaba's 2 leading units, Huabei, which is similar to a traditional credit card service, and Jiebei, which makes small unsecured loans, to have their own independent app platforms removed from the Alipay app itself. A few months ago, regulators had already required Ant to separate its main business from these 2 units, but the news this week is just a further and more consequential split. These 2 businesses represent billions of dollars of revenue for Ant. Ant Group has had a tough year, to put it mildly, before its IPO was pulled after founder Jack Ma presented what ended up being an unwise speech critical of Beijing regulators. Analysts believe that the company would have been valued at $200 to $300 billion US dollars. Now it could well be worth half of that. Alibaba Group, which was also founded by Jack Ma, itself has seen its market cap deteriorate by more than 40% over the last 12 months. Now, while we're on technology companies as well this week, officials from the Ministry of Human Resources and Social Security, the Ministry of Transport, and the State Administration for Market Regulation met with Didi, Meituan, and other major technology platforms in Beijing, requiring them to offer contracts or written agreements to the hundreds of thousands of food delivery men, taxi drivers, etc., used on the platform. Put another way, these major tech companies must treat these workers as employees now, not as independent contractors as they have been in recent years. This means hundreds of thousands of workers will see income improvements, holidays, rest breaks, safety guarantees, insurance and other benefits, labor protections that you would expect from an employer. The costs will be taken on by the companies, of course, and ultimately the end consumers of their services. Okay, Evergrande, it's had another bad week. We did a deep dive last week into the nature of Evergrande, the Evergrande crisis and what it means for customers and the company and the government, the wider economy. That was in the last video. So check out the last video if you want a primer to catch up why Evergrande is such an important topic to be following right now if you're concerned about the Chinese economy. The crisis continues this week. Over the weekend, small protests were seen across the country at Evergrande's offices from investors and home buyers who want their money back, something that always makes local officials uneasy. Chinese media is reporting that Evergrande told employees at its office in Shenyang, northeastern China, to work from home after workers who brought the company's wealth management products stage a protest in front of the building, the company, over the weekend. On Monday, a protest of about 100 people was conducted outside of Evergrande's Shenzhen office in the southern province of Guangdong. Over the weekend, too, Evergrande promised to repay small investors with less than 100,000 RMB, which is a little over $15,000 of holdings in full. By Monday, it stepped up its game a little bit for wealth product investors. Investors can now choose to receive payments through cash installments, accepting 10% of their principal and interest of matured products now and the remainder through 10% installments each quarter, or they can accept payments through property assets or use the outstanding product value to offset the balance of any Evergrande residential unit brought. Now, let's unpack this a little bit because it's quite important as we think about its balance sheet and systemic risk across the economy. This means that Evergrande essentially is offering wealth product investors physical assets, whether completed or not completed, it owns, such as unsold apartments, storefronts, and in many cases, even things like parking lots or parking spaces, with assets being handed over at rates approximately half that of the market value. The question for bondholders is, if Evergrande goes bankrupt, how many real assets will it have left? And another question for people who already own houses in these areas where Evergrande is giving unfinished apartments at half the market value, is this going to have an effect on overall apartment housing prices in these areas? Chinese media reports that most of Evergrande's own employees are wealth product investors themselves. In Anhui province alone, 70 to 80% of local employees brought these wealth management products from their employer, and that's likely to be the situation nationwide. On Monday evening, and on this point, we should point out that Evergrande employs directly about 160,000 people. We discussed that in the last video. On Monday, in a move that I'm sure eased no nerves, Evergrande published a short statement saying speculation about its bankruptcy and restructuring was, quote-unquote, totally untrue. On Tuesday, in a statement to the Hong Kong Stock Exchange, Evergrande disclosed that its monthly sales had almost halved from June through August, falling from $11 billion to $5.89 billion. On Wednesday, it was being reported that Chinese authorities had told major banks in the mainland that had lent money to China Evergrande that the group would not be paying any interest payments due the following week. Basically, regulators telling the banks don't expect to be paid for interest owed next week. The same day saw more investor protests in Jiangsu, Anhui, and Hubei provinces. As of Friday, Evergrande's stock was down almost 30% since the beginning of the week on Monday, and down over 85% over the last 12 months. With no government intervention, analysts are not optimistic. Quote, if, as expected, Evergrande is defaulting on its debt and goes through a restructuring, I don't see why it would be contained. There are other developers that are suffering from the same problem of no access to liquidity and have extended themselves too much, end quote. An Evergrande fire sale could collapse prices, causing leveraged developers, i.e. all of them, to collapse too, crippling a sector representing a quarter to a third of China's economy. Not to mention the damage it would do to millions of regular people that have paid for homes that have not been built or that are employed in the industry. State-run media, however, disagrees with this level of pessimism, publicly at least. Quote, as some Western media outlets and investors use Chinese property giant Evergrande's debt crisis to bash the Chinese economy, experts on Tuesday pointed out that such criticism overstates the impact of the isolated incident on China's property markets. End quote. On Wednesday, the White House announced that the US and the UK would help Australia to deploy nuclear-powered submarines. The US has only ever shared nuclear propulsion technology with one other country, the UK, through an agreement in 1958. The partnership, known as AUKUS, AUKUS, is a major strategic pact that will bind the US, the UK, and Australia in terms of security for generations. Australia will use American and British technology to configure its next submarine fleet in a bid to replace its existing Collins-class subs with a boat more suitable to the current strategic environment from Canberra's perspective in the Indo-Pacific. With the subs, these new submarines, Australia may begin conducting routine patrols that move through the South China Sea and as far north as Taiwan. China condemned the move as irresponsible, but French officials too were not happy, saying that they were not consulted about the deal and describing the decision as a knife in the back from the Americans. The French displeasure is likely in part due to this development, meaning that Australia will scrap its previous $90 billion program to build French-designed subs. I think it seems clear to all what this move from Canberra means. Quote, "This just further deepens the sense that we do have a new Cold War in Asia, and that Australia is betting that in the new Cold War, the US is going to emerge victorious." End quote. On Tuesday evening, the government said that it was seeking to revise the regulations that govern one of the biggest industries in the Macau Special Administrative Region, the casino and gambling industry. The overhaul includes introduction of government representatives to monitor day-to-day casino operations and increase the minimum number of local directors in these casino operators. The effect of the announcement on capital markets was swift. On Wednesday, stocks in Seng's China plunged by 33%. Galaxy Entertainment lost 20%, its steepest one-day drop in over a decade. Wayne Macau fell 29%, and MGM China Holdings lost 27%. All in all, approximately $17 billion was wiped from market valuations for Macau casino operators on the Hong Kong Stock Exchange in one day. Losses that continued into the week. JP Chase cut its rating on 6 casino operators to either neutral or sell due to concerns around regulatory intervention from the mainland. If the question is, will things improve for the gambling industry in Macau? At this point, it seems I wouldn't put any money on it. Last up, on Wednesday, China's so-called Mini Olympics, the national games, which started back in 1959 in China, held its opening ceremony. More than 12,000 athletes from across China will compete in this year's games, which will run through to September 12th. Of course, some of the state media just couldn't help themselves, adding a good dose of nationalism to some of the coverage. Quote, "Many athletes and reporters who participated in the Tokyo 2020 Games nearly 2 months ago said that when they arrived at the National Games villages, their impression is that Xi'an is much better than Tokyo in terms of facilities, a feeling carried through to the opening ceremony." End quote. Well, that's the episode for this week. I hope you guys enjoyed it. Throw your comments below, and I'll see you all next time. Wherever you are, I hope you're staying safe and staying sane. See you next time on China Update.